Good morning and welcome to the pre-market report for Thursday 18th August 2022. Now, before we dwell into pre-market report, I would like to remind you that you can subscribe for the market related services at a 10% discount until the end of this week. Once the weekends, then the discount will be off. So if you're interested, then do WhatsApp me on the number shown in the information box below. Now, when we look at the international news front today, we see that on the global front, the main news is number one, that the Fed minutes are showing that there are going to be more rate hikes in the pipeline. This is as they're not going to stop until the inflation eases, which is a thing which everyone expected. The only thing which is a bit positive is, as I said, that the pace could slow down as of now, as what they predict. The next thing is basically that, which I even retweeted during market hours yesterday, is that UK's inflation rate is coming at 10.1%, which is the highest seen in a very long time for them. So it'll be interesting to see how now that spirals further upwards. This is as the issue with food and energy costs is only getting worse and worse as they're basically facing a drought. So that's going to be an interesting dynamic to see how the markets adjust to globally. Now on the Indian economy front, India's oil demand rose by 7.7%. Is set to rise by 7.7% in 2023. So that is a positive thing, as it just shows that the Indian economy is growing well and is expected to grow well in the coming year. Then another positive news is that the Indian government bonds will most likely be next year added to the global index, which can bring in passive inflows of up to $35 billion, which is a huge positive for the Indian economy as a whole when we look at the bigger picture. The other news is more stock specific, so I will not cover that as of now. And now let's dwell into the charts and of the global indexes and the local indexes. Now on the global front, the first chart we're looking at is the Nasdaq. Now for the Nasdaq, I had shared this resistance level 13788.6. Now it did manage to stop the rise again, as the rise couldn't reach the 200 moving average, and that's now it will be interesting for us to see whether the rise can fall back to the former resistance, which is new support, which is also slightly below the 20-day moving average. This would be a healthy pullback. If this pullback were to occur to this zone or this zone, then there will be a very healthy pullback for next leg of an up move to occur. Now the S&P 500. Now the S&P 500, I had not given a conscious level. As I had said, I was expecting it to hit the 200 moving average and then come down. Now that is forming, and here it's the same pattern I'm now looking for, is a pullback to the 20-day moving average, which is roughly at the former quant resistance level, now which will act as a support. Now, so same way, if the three indexes can have a pullback to the former quant resistance level and use it as a support, then that will be an excellent formation for one leg of a pullback and then a further up move in the coming weeks. And the same can be said for the Dow Jones, as it's basically followed the exact same pattern. Since you're already looking here, let's look at the stocks we looked at on Tuesday, for which I had shared the levels. Now the first one was Titan. You can see Titan basically this is Tuesday's candle. This is the candle when we analyzed. I said there's going to be a very strong resistance at 2508. We see the Titan in the past two trading sessions has not been able to breach this zone, and I do not expect it to breach the zone until there is a very strong up move expected in the stock. As I said in Tuesday's video, pre-market video, I expect it to bounce between 2,500 and 2,400 until Titan finds its legs. Because a move above 2,500 obviously fine would give us the next target of 2,600, but it would open a huge range on the upside, which the stock is not ready for as of now. And the next one which I had looked at was Star Health. Star Health, I had said there's a strong core support between 660 and 674. Now we can see how that exactly played out. This is when we looked at the next day, on Wednesday, the stock had a basically, on Tuesday the stock had a sharp dip after we looked at it. That was the candle when we analyzed it, and the stock exactly stopped at basically 660 rupees and had a bounce back up. Now, as long as it stays within this range, I wouldn't advise any longs. This is as the stock is still very weak on the longer term front, and we have to see if it can continue holding this support zone. Also, no longs until it breaks this simple candle resistance level. I know it's quite far away, but this zone is going to be a trap for a lot of traders, because if it breaks this support, then it will reach 610, but it will not stop at 610, it will stop way further down. So this is a very important support zone. Now the next is Nozara, which I had covered. Now Nozara, the same thing happened. The support which I had given at 606 managed to work, and the stock is now stuck at the same 680 resistance level I had shared. So it will be interesting to see how these three stocks continue performing, as we had covered them in Tuesday's pre-market video. Now when we come to our local indexes, they have on a parabolic up move that has had absolutely no pullback, which is shocking. Now yesterday on Twitter I shared that I had given client 7970 as a resistance and 39600 as a resistance in Banknifty. Now those two worked very well, and SGX is showing a tiny gap down of 28 points. So it's going to be interesting to see if they can breach these zones, and if they do breach, yes, their resistance levels up above them. However, I don't expect that breach to really survive for long. This is one of the reasons why I've sold monthly calls, as I expect that to I expect the index now to have some trouble, because it's been too much of an overbought condition. So that is all for the indexes and stocks. If you're interested, do subscribe to the market services, and do like the video and subscribe to the channel.